Hello, Warriors. Everyone ready for the NFP? A lot of you action junkies in the house. Alexander, Richard, Brock, how are you? Sinatra, everyone doing okay? Everyone, hello, Vitor. Nice to meet you.
Hey, Dale. Good morning.
Good morning.
TGIF. Hey, I was just gonna say I see a black screen, but now I don't.
Oh,
now I see your screen.
There you go.
Morning.
Everything's cool. Ryan, how are you? You're not in the water anymore. Great to hear your clear voice in the morning. So just a couple of things I'm looking for. Yen almost got to the high up here. We had this pop in yields, Ryan. I'd like to see the yen make good thing I erased that line yesterday, huh, Ryan?
Yeah, exactly. Yeah.
Anyway, because it was on both sides of it. So, new high for this rally in yields. I would like to see the yen take out that high. I think we would have divergence, and I've been looking for this touch on the yen. It doesn't have to happen today. You have a big inside week after probably sucked in some shorts last week, and they're all being squeezed. I want to see what happens up here around 1250, 1260. And if I have some short-term divergences, which I don't on the two, let's see, the one or the one. So I'd like, I'm waiting for, over 112 to probe the short, which would mean that, perhaps we're going to get a high. I've seen some people talk about 168 as a target, which is a lower high from what we had last spring up here at 178.
Yeah.
But, what are you thinking here, Ryan?
Well,
far enough here.
I said at the beginning of the week, particularly with dollar yen, it looked like it was going to keep this bullish momentum. It couldn't get under that and hold under that 111 area, get through that 1080 area. And I said, I wouldn't be surprised if we see 112 by the end of the week. And here we are.
Yeah, you did.
We've kissed it, and going to wait for the numbers now. But as far as yields go, how much upside is it going to be? I mean, I'm surprised we've seen this move today with the NFP risk. That almost says, market doesn't give a monkeys about the NFP. It's looking forward. The number itself isn't going to be important. I still think within the details, it's going to be important. We need to look at this participation rate versus the unemployment rate. And as I've just said in the trading room, at some point we're going to switch from the headline number I said it yesterday, into looking for the wages.
Okay.
Because that's going to be the inflationary pressure. But as far as yields go, we could get above 160, maybe up to 165 today.
Okay.
If we push 170, I think that'll be a big move, and we'll probably see dollar yen following through.
Something that's been fighting higher yields, which normally doesn't, is gold. So I mean, yields have been rising all week, right? And all it's been able to do hasn't been able to even come close to challenging last week's higher low from the flash crash low. So I mean, gold's acting resilient to me. Here's what I say to myself, that if a market holds up under headwinds, which higher yields should be a headwind, what's going to happen when that headwind dissipates, right? Say, we go up to that 165, 68 and then start coming down. So I would call this, maybe if we get another push, it could take gold down. I think this low is where you have to be wrong, but I'd like a chance if we could do it again to, try longs down here, 1740, 1730, and actually silver's acting okay too. You got a little head and shoulders. The only thing I don't like about silver is this RSI reading on the 2 hour that it bottomed. Rarely do you get bottoms that aren't retested with that kind of momentum. It was just a shade over 20. But silver's acting okay too. Maybe the right shoulder comes in here. I like the metals, especially since if I'm going to be right about maybe another 70 pips or so. So the, the gold and silver, let's see how they can fight it if we get 112.50 in the yen. See if they sell off a little bit here. And the dollar, maybe the dollar pushes up to new highs. If we get a strong number, we're not that far away. So far, it's like the second lower high, but a good number could just juice it to new highs.
Yeah.
Right.
I think with the metals case, a lot of people are obviously looking at metals, not just so much for what's going on in the dollar and the inflation, but for, the stimulus and infrastructure spending. Is it going to create a market for metals like that, obviously to be used, things like solar panels and whatnot. So maybe we're seeing now we're getting a taper and things are normalizing. Maybe we're seeing a bit of a pause before markets take another leg, maybe on that spending issue.
Hey, and guys, good morning, TGIF. I know I jumped in a little bit earlier. I got to say something about infrastructure spending and all this. I don't know where the hell
I know
where are we gonna find people to work those jobs? I just don't know. We're dealing with such a. I went to go get coffee at Panera Bread right next door. No, I went to Panera Bread and they're like, yeah, you can't go through the drive-through. We can't even find employees. You have to come in. And they're like, we came from the executive office to come work in our.
Where did everyone go? They didn't all die from COVID.
I don't know, but where the hell are we going to find workers to I mean, look, this economy is like bazonkers right now, and people just don't want to work. I got my teenage kids that are trading cryptos and equities every day that are like, hell, I'm not picking up dog poop. I'm like, come on, kids, I need help with the dog poop, and they're like, no, I'm trading. I'm like, really? That's what I get. So I don't know, man. It's anyway. I had to kind of throw it. It's more of a joke on a Friday, but I want to say good morning, everybody. It's going to be a busy day today, and we have obviously a lot going on, and when
you gotta hire a yuppie to pick up your dog poop because they they're not trading crypto.
We have a dog services, but anyway,
get a robot dog.
Yeah, exactly. So I want to talk a little bit about what you guys were just discussing as far as yields go, and I'm going to say something that Ryan just commented on regarding the dollar yen, and you guys know I've not had a good feel for the dollar yen as of late. I think it's been pulled between so many different forces, but obviously ultimately the yields is what's really pushing it at this stage in the game. And and Ryan's point about the dollar yen's breaking higher, meaning it doesn't care what the number is. I have to reiterate, this is something that I've been talking about for the last week on our private webinars for the Forex Analytics traders, the Morning Edge and Daily Roundup. And I 100% agree with that sentiment. Is the market knows what to expect from the Fed. We know what the Fed's going to give us. And so even on a miss today, if the dollar does dip, you got to buy the dip. You just have to, because we know what the timeline is. And I know I've been saying it all week, but unless we get a couple of jobs data that are really poor, I mean, like we're expecting, let's say roughly about 500,000 jobs today. What's the number that we're looking at, Ryan?
It's about 500K.
Yeah, about 500K, right? We would need a couple of bad prints. Like, let's say we only create 150,000 jobs, which is possible. I don't know how possible, but I mean, anything's possible on NFP day, right? We get a weak piece of data. The dollar's probably going to pull back a little bit, but you got to buy it, because then the argument's going to be, well, that was an anomaly. Oh, there were seasonal adjustments and blah, blah, blah. Oh, we forgot to factor in this and that and the other. Everybody will make up whatever story they want after the fact. But the fact of the matter is, we already know what the Fed's taper timeline is going to be. So, so I'm a buyer on dips. Now, if we had a couple of NFPs that were, back to back bad, like let's say we had one today and next month, we're looking at October's data and it's horrible. I would second guess buying the dollar again. You know what I mean? I think it works this time. I don't know if it worked 2 months in a row, but your point, Ryan, I wanted to just say that the dollar is very strong. And, we got this really bullish, and I know this is my chart of the day yesterday. We have a very bullish wedge going into non-farm payroll. This is the weekly 38% retracement. And I want to make this case again, something I've talked about all week. This is the determining factor between a continuation of the dollar moving lower or a complete reversal of the dollar. And this is what's going to put really dollar bears that have been dollar bears all year, that have been wrong all year, because we've really been moving up all year long. And the euro is not traded towards 130. The euro could very easily trade towards 113, 114 now, especially if we get a breakout above this 38% retracement. So, we get above this 38% retracement. Now the chances of a longer term dollar consolidation is much greater. And the likelihood of a continuation or an AB equals CD dollar index move to the 80s, I don't want to say goes out the door, but the likelihood of that from a technical perspective becomes a lot less. So the point I'm trying to make is dollar bulls are wrong when we get above 94.50. That is the 38% retracement. Dollar bears, I'm sorry. And then you got a big W formation that puts us a lot higher, right? Don't forget that's what this is. W.
Could I ask you this, Blake? We've had a strong dollar. Yields are heading up. Up until Tuesday, Wednesday, S&P has been under pressure. But coming into today, look at the weekly. To me, it looks like the comeback kid. Take a look at the weekly. You have a reversal candle to the upside. Of S&P.
Of the S&P. Oh yeah. The S&P has made a nice recovery, and man,
maybe we want new highs. I mean, look at the weekly.
We could. I mean, why not? I'm trying to think what the S&P would really like today. And, we're having this conversation, by the way, if you're in the Forex Analytix chat room. So this is the chat room, having a great conversation with K-Man about, K-Man, he came over. Ryan, you want to talk a little bit about K-Man?
He's from Belgium.
Is he one of Ryan's minions?
he's one of Ryan's team members. No, and
he's a good friend, ex bank trader over from Belgium. He's traded in Japan for a long time, traded in the UK. He knows his onions when it comes to things like Japan. He knows his onions, and he's got into a lot of the option stuff and volatility and all that sort of thing. But he's got a great handle. Yeah, he's got a great handle on the fundamentals and macro picture.
He's awesome. I love having him in the chat room. He's you can see where this is our conversation. And Ryan, by the way, great outlook. Why did you post that when I left to go to the bathroom? That sucks. I didn't even get a chance to read it. Anyway, but we were talking and posting all these different charts and and just talking about everything. Everything.
Forex Analytix is the best. You know what I mean, man?
Well, no. But the point I'm trying to make here is we were talking about like the yields and what's happening in the shorter end, and you got to I was just trying to get my head around like what are stocks going to really like today, and maybe Ryan, you can help me out here because I don't know what stocks are really going to like, because if we get a good number, like, and by the way, I think we're going to get a good number today. So if we get a good number, yields go higher, dollar rallies, stock market goes, wait a second, is the Fed taper timeline going to, speed up a little bit? Does the stock market really like that? Or does the stock market really like, hey, we had a miss, we only created 200,000 jobs. And I'm not giving us any outsized numbers, by the way, like creating 1 million jobs or losing jobs. I'm just saying, hey, we create 600,000 jobs, and not even talking about unemployment rate or anything else. Let's just talking about the headline number. If the jobs come in at a little bit of a miss, do we get stocks rallying to new highs or trying to break higher? And you can see this little pennant setting up. Do we try to break higher here on a weak number because people go, well, maybe the Fed's timeline is going to change and they're going to, again, quote unquote, keep rates lower for longer, keep, taper less, blah, 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 blah. What do you think? Because but again, I have to reiterate, I don't think the Fed's going to blink. And so even on a miss, I think the Fed stays where they stay. So I think a dollar is going to be bought. So therefore, I don't see a situation where where stocks really go higher. But just because I don't see it doesn't mean it can't happen. It for sure can happen, especially in a bullish market. I mean,
yeah, I think you got it's twofold. I think we're still in a bit right now. We're in a bit of the taper wish wash, if you like. Where the market's adjusting to the taper, that sort of thing. But what do stocks really want at the end of the day? I mean, take out, central bank easy money and all that stuff. What do stocks want? They want people in jobs, people getting paid decent wages, which means people spending money, which means the economy growing. And that's good for stocks. It's always been good for stocks. It's only since the QE times going back to 2008 and all that crap that's distorted the market.
But that's the crap we live in. Right.
That's the crap we live in. But if we once again, before the virus, we were getting back to normal. The Fed were cutting rates before the virus kicked off and that was adjusting to economic conditions at the time. Here we are, we've had a big reset. Now we're coming out of QE again. We're coming back to normalization again. We knew there wasn't going to be a tantrum, but coming off the highs as they have done, that's just part and parcel of the adjustment. But then we're going to get back to stocks trading on the proper fundamentals, and they want to see jobs being created. They want to see people taking jobs, higher wages, because that's good for the economy and that's good for stocks. Okay,
I agree with everything that you say. However, the question I have for you is then, what we saw what happened last time around. We had a taper tantrum, right? Now the market seems pretty content with understanding that rates are moving higher. And as they move higher, we can absorb them. Stocks seem fine with it. Is there a breaking point? I guess this is where I ask. I don't think Stelios is here because he's still out, but he would be in. And I'm going to just argue his point for a second. And he'll be back on Monday, by the way, guys. At some point when yields break out, stocks are going to take notice. And, I mean, here we are with the 10-year, right? And this is just a quick view of, yield. So you can just kind of see it. I think the breaking point is we're getting towards it, and, we get above, like, let's say 170. And you had mentioned that number earlier. That would be a big move in rates, right? Let's say we start breaking above 170 and then, 178. When does that freak out the market? I mean, does the market say, holy, schnickers, we got higher rates and, stocks start taking a beating? What do you think there?
Yeah, I think it's quite possible. I'm loath to pick a side because there's so much in the mix. There's the Bank of America report out this week that today that hit the wires earlier. Investors are piling into tips for that inflation protection, and they put $14.9 billion into cash. And this is something we spoke about a couple of weeks ago. If you're not in stocks, if you're not in gold, if you're not in bonds, where are you going to go? And if the market moves into cash, if investors move into cash, that means they're not confident of the economic future.
Yeah,
you put your money into risk, and here we have them putting nearly 15 billion in the last week into cash, and they put 1.8 billion into tips. That's the inflation protected treasuries. That's you could see stocks fall on a good number. You could see stocks fall on a bad number.
Yeah,
it all depends on where the money wants to go.
We can argue either point, right? I mean, it makes it really a difficult. It does make it a little different.
I can't pick it.
I'm looking for new highs by year end.
Yeah, I can't put my hand on my heart and say today it's going to go up or down on a good or bad number. You
think China's going to let things fall apart in front of the Olympics in February? No. I don't think so.
No.
Yeah, and well, here's the thing about China too, and somebody made this point. Somebody I interviewed recently. It's Chris Weston from Pepperstone. He said he was like, he's like, this is Xi's going up for re-election, third term, unprecedented for this to happen. That doesn't mean things can't unravel, but he's going to do his part.
Everything he can.
Yeah. That's why I think, I think that heightens the risk of like a Taiwan situation. Again, this is I think about, China and, the showing strength in Taiwan and taking back what's theirs. That's good for him, right?
You think he would do that before the Olympics?
Yes, that's politically good for him.
He
right?
changed the constitution so he could get in the extra term.
Forget the Olympics then.
Anyway, but I think Paulie was in the chat room too, talking about the lower end of the yield curve, and it's really been moving this week. I should take it off an hourly chart here. You can see like here's the 2-year, here's a 5-year. So the lower end of the curve is really starting to move as well. So whenever I see a spike up in like some of the lower end here, I start to think, the market's kind of sniffing out a little bit of risk aversion too. That's something that I think we need to keep an eye on. I want to point out the euro. This has been my chart of the day. I want to say it was a couple of days ago. And if you guys don't know where to find it, it's just our blog on, I try to update that chart Monday through Thursday because I don't do them on Friday afternoons, but, Monday through Thursday, it's just on our website and it's free. But the euro was my chart of the day the other day, and it's bear flag, still trading heavy. The problem that I see with the euro technically is it's still trading below support and it's comfortable there. It's one thing if you trade below or trade above a level and freaks some people out, trigger some stops, get some people closing out, positions, and then, you get a reversal and you go, okay, well, that was just a sucker move. But, the euro's getting quite comfortable below 116. Ryan, are there any reasons for that? I mean, I know we had some economic data this week out of Europe, but what do you say about this euro persistent weakness? And for the record, I am looking for lower levels in the euro. I really want to buy the euro at lower levels, but I don't like how it's acting right now. It's kind of like the same story with like gold and silver, how they're trading really heavy. What do you think about the euro here?
It sucks.
Okay, there we go. All right, so moving on. Just kidding.
No, it's not looking strong at all, is it? It's looking very weak. It's not managing to do anything at the moment. Obviously, we've got this low volatility in it still. But you're right. When you get bounces off, 1535 isn't really a level. 30, it's not really a level, but we're bouncing and we can't get above 70.
Yep.
It's one of those things. It's looking very dead cat. And I wouldn't be surprised if we test 115, potentially more. That's my big level below the 115 level.
Yeah, so you point out 115. I mean, that's 161% extension of just this last move. That's a big golden fib there. We have a lot of previous breakout point. So that's horizontal resistance, previous resistance, current support, 50% long-term retracement of the post-COVID move. So a lot of confluence right there around the 115, even though this flag points to 114.50, which I don't discount those because, the confluence levels are great, but, as you all know, support and resistance is not an exact science. So we could very easily do one of these, whoop, 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 and then, longer term, fast forward like 3 weeks later, we'll be like, well, it held around the 115 level, even though it plunged 50 pips below that at the time. So, I agree with you. It's trading heavy. Okay. One last thing we need to talk about. So we have Canadian data coming up as well. So it's not an easy, cut and paste, got US data. We've got Canadian data as well. Dollar Canadian's trading heavy. We're below the 88% retracement. We were making new lows. I don't like it. I actually was long the dollar Canadian. And I am still playing some Canadian crosses right now, but I was long the dollar Canadian earlier this week, like Monday, Tuesday, somewhere around there. I bought it at 125.72 or 78, wherever my average was, because I got out of it last night. I got out of it last night, as we were, starting to, look. I mean, look, we're trading heavy. We're really close to the 200-day moving average. Crude oil has been obviously a big factor. We have crude Simon pointed out in our chat room today. He's like, non-farm payroll day, we have some pretty big resistance here. We just hit not 80, but we just hit these highs. Shoot. We just hit these highs again, which Simon, great eye, but also keep in mind we're in a very bullish channel, which everybody in the Forex Analytics room yesterday knew. We were sitting on channel support yesterday, and it just bounced like a bat out of hell. So, crude obviously is playing a big role here. But what should we expect out of Canada today, if anything? And by the way, I have to reiterate, the 200-day moving average is right here at 125.10, let's say roughly, and a lot of horizontal support. So, Ryan, what do you think here with Canada?
Yeah, we got some big levels down here as well, 125, but we're very close. We're trading 125.30, so we could see a level flushed quite easily on big numbers. It's always difficult when you got CAD jobs alongside US jobs, because you've got to match them together. Are they both going the same way for each individual currency or against each other? If it's something round about ballpark, then forget CAD jobs, concentrate on NFP. That would be my advice for looking at trading it. But if you do get a big variation in the Canada numbers, then it's going to be going to have to hot foot it around and see what's what.
Well, what we're going to do today, and thank you, Ryan, for your input, is we're going to put the dollar Canadian on one side here. I'm going to put it on an intraday chart here. I'm going to actually monitor the dollar yen, just because it tends to be the cleanest dollar responsive currency, and it, based on the number. So good. By the way, stocks are getting their bid going on as we go into the data.
Just before we get into it, I'm going to just go radio silent over the NFP, because I've got to put all the posts up. But I don't know if you want to tell the guys that we've got the live blog running now on site, and
thank you very much. So Ryan's going to go handle that. Stelios isn't here. Steve has been kind of hit or miss the last couple of. Make sure I'm on the right chart. This is the S&P. Look at the 5-minute chart here. Steve has been kind of dealing with his son's school issues, so he's been a little hit or miss. And Stelios is out, so looks like it's just me and you, kid. That's me and you, Dale. So how you doing? It's just me and you, kid. Hey, by the way, just complimentary part of Forex Analytix, and this is the platform, by the way. You have Live Squawk here, and the news flow is the live blog, which Ryan's dealing with right at the moment. One of the things that we have is the data flash, and the data flash is it'll give you the data as it's being released. I'm going to move that to the side because I'm going to go back over to the charts. I'm going to pull the data flash over to right about there so we can see what we're looking for. So we're looking about 500,000 jobs, unemployment rate to drop to 5.1%. Here's your S&P right here. Dollar Canadian is going to be right in the middle, since we have both Canadian and US jobs. You can see all those, the numbers here. By the way, Canada is expecting to create 65,000 jobs. And so let's see, how far out are we? We're 30 seconds out. And then we have the dollar yen here. So keep an eye on yields, and the dollar yen should reflect good or bad data right off the bat, at least. So, here we go, guys, buckle up. Woohoo. Glad you all are here. And let me think in my head what I'm trying to do personally, because I hope we get a miss. I hope we only create 300,000 jobs. dollar sells off and I'm going to buy it. So, that would be equivalent of me selling euro close to 117 if I can get it, basically, or 116, excuse me. 194,000. So here we go. Come on, euro. It's a bad number. Unemployment rate's good. So hold on. Euro's at 82, 83. Hold on. I'm almost there. Oh, it's not going to make it up there. Oh, no.
I show 84.
No.
Oh, then it came off.
I wanted it to spike up towards, damn it. I'm going to end up missing it. The unemployment rate's good. So I want, and look at the S&P starting to roll over. Damn it. I'm really was. Huh?
It's a long day. They'll be.
Yeah. Well, we'll see. I've got everything ready to go. So I'm.
Where were you trying to sell it? 85.
I'm trying to sell it at 116 if I can get it. If we can get euro at 116, maybe even the 115.90s, I'm in. But I just don't know if we're going to see it today. I mean, here we are trading down at trading down to 73, 71. It's dropping a little bit here.
Yeah.
I just don't know if we're going to get that. Okay, let's hold on. So I was hoping for week data. We got the week data, right?
Yeah.
Here's the dollar Canadian's getting smoked. Thank God I'm not long that thing.
Yeah, good numbers from Canada.
Yeah. Very good numbers. 157,000 jobs. I mean, that's we were expecting 65,000 jobs. What is that the equivalent of? That's almost that's like north of 1 million jobs. If you look at it, if you put Canada, next to the US, I mean, from a demographic standpoint, that's a huge number out of Canada.
Big jump in full-time jobs. That's the kicker. 193,000.
I'm so irritated with this euro. It's going to completely crap the bed right now. Man, because again, I will reiterate, bad data, the market's going to look past it and go, well, doesn't matter. The Fed's still going to, and look at and you know what I should have been paying attention to, which I wasn't, is the dollar Mexican peso, which it slumped, and I've been playing it to the long side all week long. And that thing's just boinged crazy. Yeah.
Yields are coming back. It's like they're discounting. Yeah.
Crap on a stick, guys. When your levels don't get hit, it's hard to, I don't ever recommend people just start chasing the market. So it's, you wait for certain levels, you wait for them to happen. Look, yields came down. They're going to pop right back up again, because again, the market's going to shake this off and say, yeah, well, bad number today, stocks are coming down, by the way.
I'm just looking at the details. It's not an overly bad report.
No, I mean, look at unemployment rate. No, continue. I'm sorry. I don't mean to.
Yeah, that's all right. Private payrolls up 317, manufacturing up 26. So add those together, you got 343. Government payrolls was the loser, down 123k. Which, if you take into account the virus, maybe schools and the teacher thing that we had before, it's even 194. It doesn't look that bad. Private payroll strong at 393. That to me is the kicker. 317. That makes it a strong report. The participation rate, what did that do? That rose a tiny bit. That was down. That was down a point. So that potentially takes care of the unemployment rate, a good chunk of it anyway. So on that side, it's not too positive. But I wouldn't call this a bad report.
No, and the thing is like I've been mentioning, I mean, the market's probably going to shake it off anyway. So what does that mean for stocks? What does that mean for equity markets though? Because equity markets are really unchanged. I want to say they're really unchanged. I mean, if you look at like an hourly, at first you got the Pavlovian response from the stock market, which is bad numbers, buy stocks, right? That's the Pavlovian, I've got my dogs and I'm about ready to feed them food and they start drooling all over the floor, which they do. I have 3 dogs that start drooling at like 7 o'clock in the morning, which is always awesome. Anyway, you got the same thing here. Weak number. I'm buying equities because the Fed's going to not taper. And then people start going, wait a second, is that really going to be the case now? So you got stocks that are kind of hesitant. I think what you look at equities, probably what would freak anybody who's long out right now, like would worry them. And that's what I try to think about is like, okay, if I'm long stocks, where am I out or where am I getting nervous? I would think probably below here, because you can see like this, this hourly support. We were very well supported as kind of a launch pad for the market. It was around the 43.75 level. We get below that, and the markets might.
Gold is really surging. It's a star today.
Oh, it is. Yeah, it's about time.
Higher yields hasn't bothered gold at all.
Well, gold is moving, but I tell you, I need a lot more convincing than just what we're seeing here in gold. We've been looking at this 1780, and then these trend lines over here at 1800 for the last 2 weeks, and so I really would want to see that move in order for me to start thinking. I'd like to see these levels break before I start getting bullish here. The one thing I have to point out too regarding, the markets here regarding, gold, or you want to talk about like some safe haven type of things, inflation hedges, whatever you want to call it. We have Bitcoin, which is coming into that really big confluence, and also channel resistance, which comes in around 57,000. We made a new high, is very divergent relative strength intraday. I don't think that this 57,000 level is going to hold in Bitcoin. I think it's going to trade back down towards, 50,000, which, could be supportive, believe it or not, of gold. I see a lot of divergence there between the two. We are starting to see look at the NASDAQ ripping right now on this number. S&P is not, but the NASDAQ is, which is actually weighing on the dollar. I want to see the dollar. I really am waiting to see the euro trade back at 116. I am a seller up there if we can get it. So we'll see if we can get it. Ryan, is there anything else that you're looking at right now?
No, same as you. I'm just watching these moves. Dollar CAD is mincing around that 125 handle.
Yeah, we're at the 200-day moving average, right?
Yeah, so you've got to watch this pair, because it will sit there for 5-10 minutes. You can think, oh, that's it. I'll just buy it, and then what? It will hit you again with a second wind.
So right.
For me, I'll watch the clock. I'll watch the clock here and see what it does. We've got some levels. I think 24.77 is the next level under that. I think that's the 50 fib of the June move. Just off the top of my head, I haven't got my chart open. So if we get down to there, sort of the 124.80 odd level, and we find a bit of a floor, that's maybe where I'll look to pick some up for a bit of a fade.
124.80, we're almost there. We're literally almost there. Let's see. And this is a lot of horizontal support. You can see it right there. My guess would be, just thinking about the Canadian's really efficient. It's a really efficient pair at stopping everybody out. So you gotta, I always like kind of sit back and let it stop everybody out first, and then try to play a, counter trend type of move. But yeah, I mean, it is. This
is the perfect storm for a sell-off in dollar CAD. Bad US jobs, good Canadian jobs.
Yeah. So let's see if we can get it. Let's see if we get a little mix going on here. Now let's take a look at the NASDAQ really quick, because the NASDAQ's what's moving higher. Now this is a chart so you can just kind of see what I've been looking at for the last couple of days. The blue line is basically what how I've been viewing it the last few days. I've been expecting a move up here towards the neckline of this head and shoulder pattern, which comes at 15,000, right, pretty much where we're at. Maybe another 50 or 60 points from where we're at currently. So let the NASDAQ make a little move this morning and see if we can stall up here. And I think that's what we should be looking at with the NASDAQ. and because it is obviously the NASDAQ 100's got its, got its little giddy up going on right now. And S&P is trying to break higher. So we are at the highs of the session right now. The dollar is weaker, but the euro can't get back up to 116. I've got all sorts of orders sitting up at 116 right now. So hoping we see it. We might see it this morning. And that's pretty much it. I'm just looking around at anything else that might be moving. But let's see what yields are doing, because yields obviously are coming off right now. They are, and dollar yen's moving in response to that. But really, like you said, Ryan, this isn't like the worst number out there. So should you be chasing the dollar lower? Should you be chasing yields lower here? I'm in the opposite camp right now. I really am looking to buy the dollar on a dip. So
yeah, I agree. I mean, I'm just, with the on the set of time, just looking at it, it's twofold, this jobs report. Okay, the numbers 194 doesn't look good on paper, but as I said, the private payrolls hold it up. It's not, the jobs don't seem to be the issue. It's the structural stuff underneath it, like that participation rate dropping. Again, that's going to widen the gap between the vacancies and the unemployed. It's still going to create job shortage, and that's becoming a structural problem that the Fed have got to solve.
How is the Fed going to solve this problem?
Oh, hey, Steve, how you doing? You made it.
Hey,
what's
Steve.
going on?
Yeah, I've been here for quite some time. Hey, guys, we've been. Central banks claim they can even solve natural disaster and inequality and green energy problems, but they can't do any of that. How is the Fed going to solve the problem? The Fed is the main creator of the problems we see with the labor market.
Agreed.
Yeah,
we need to abolish the Fed
without any question.
We need to
politicians. You need your
matter of fact, they should be publicly
asses.
hung. I'm just kidding. Sorry.
The comments.
It's a little Friday on me. You know what? How do you feel? How do you really feel?
Not reflective.
Steve, go ahead. Go off the handle. We're waiting for it. This is your platform. We got everybody listening. Let's hear it.
No, I don't. I mean, I've said multiple times what I have to say. Having to do with the job report, it's another report that shows that there is a real structural problem. The fact that labor, participation rate keeps dropping and dropping and dropping is a huge underlying issue. And to be honest, it's one of the few things I agree with Powell, although of course the Fed decided to use the actual real numbers without talking about the real numbers when it was convenient to ignore inflation issues. The labor market is not as good as the unemployment rate shows. And I had spoken and explained some time ago when we still had Trump. You remember the period that everybody was cheering that unemployment is, the lowest it had been since the 1950s. That during that period, they had explained why the labor market has nothing to do with what the labor market was in 1950s. And to claim victory was really a misconception of how things work. Back then, of course, it wasn't convenient to acknowledge it from the side of the Fed. Now they have acknowledged that the labor market is not tight as the employment rate shows, because they want to use that as an excuse to ignore the obvious problem with inflation, to say that, listen, yes, inflation is at target, which of course is, hugely above target, but we still have to keep pushing because the labor market is not as good as it shows, which is true. It isn't. And the real numbers, if you want to look a little bit more of what the real number is, the only thing you need to go is go to official data and look for U6, the U6 rate, which in essence has more of the unemployed people that used to belong to the headline number, which is the U3 that you now see. But they stripped out a lot of categories of unemployed people from the U3 and pushed them to the U6 several years ago, if I remember right. That happened under Clinton. So since then, the unemployment rate very much understates the real number of unemployed people. For example, if you are unemployed for more than 365 days, you don't show as unemployed anymore. Yeah. Also, unemployment rate used to count people that had part-time jobs, but they were actually looking for full-time jobs. Because if you had just a part-time job just to make ends meet, but you wanted to be fully employed, you counted as unemployed. Not anymore.
Not anymore.
Not anymore. Yes, exactly.
Mm-hmm.
So we have a lot
the
of
real unemployment rate's 20%.
The real unemployment rate, I would assume currently is a little bit north of 10%. I would say around 10 to 12%.
So Steve, okay, taking all this into account, since this is a traders webinar, we don't believe the employment numbers or the unemployment numbers are what they are. What do we do with it? With that data? How do we translate that?
Listen, I think it's more than obvious that now that the stimulus money has started running out, there is a clear accelerated deceleration of growth, right? And we can see it in several places. And I think that unless they push a very a hefty fiscal expenditure type of plan, that's going to become more obvious in the months ahead. So we have the Fed that is claiming they're going to start tapering in an economy that is definitely not growing. I mean, the growth is not accelerating, quite the opposite. Probably we had like an explosive short-term growth following going out of the lockdown period, which is, of course, is normal. It happened, globally. But now they claim that they will start tapering, with the economy probably more going towards some kind of a slowdown than anything else.
Okay. So again, how do we take advantage of it?
Call me a skeptic. What I'm trying to say here is that, as I've said before, I don't see that tapering plan working out that well, and I see it potentially stalling before it comes to a completion.
All right, Blake's asking you for a position, and we
know so what do I do?
Is.
Okay, I hear all that.
Metals,
what do you do?
Precious metals.
I think that for the time being, we have to be very skeptical having to do with any movement of the dollar to the upside.
Yeah.
Okay. Especially sell dollars.
Yeah.
If we break if we break below 93.50 in the DXY, I think there is a good chance that we're going to see a move lower. Now, on the other hand,
that only took me 35 minutes to extract that out of you. I am so happy. Just kidding, Steve. Okay, so below 93.50, I agree with you. Technically, that's where things look a little dicey, and that I actually wrote that in the blog. Actually, what was it last night? Below 93.50, you got to be a little nervous about if you're long dollars. I think the risk is that we are consolidating before a big breakout, but you're not convinced that the dollar is going to break out, because you were just going to say, on the other hand,
above 95, then we have more upside for the time being, but I do think that it's still going to be short term.
Okay. So basically for what you're trying to say here is wait for a breakout here, wait for a breakdown here.
That. Yeah.
Okay. And in other words, right now, sit on your fingers and don't give us a thumbs up.
I think between 93.50 and 95, it's just noise. So
okay.
I will be involved.
Okay.
Trade the range.
Very good. Whew. That was hard.
Here's something I just want to throw in there. Just looking at the moves now, because I sit here, I watch my 15-minute charts. That's my lifeblood. They tell me everything that's going on with the price action. What you want to do here right now, I think, is we've got some highs and lows put in. Aussie dollar up in the 73.30s, big option expiry 73.30.40 today, over 4 billion. What you want to do is you look at these highs and these lows, like the lows in dollar CAD, the highs now in euro dollar, and as the clock's ticking, if we test those highs and lows again and hold them, that's a signal to potentially then try the opposite. So sell the highs, buy the lows, and because you've now got a definitive level that's shown up on your chart, shown up in the prices, So, if dollar CAD gets back to 125, 90, 95, holds it, I'll potentially looking to go long, because you can put a tight stop just below that low, and then you've got a nice tight trade and low risk, see what happens. But that's how I usually look at trading the NFP afterwards, see where the highs and lows come in, see if we test and hold those on secondary and tertiary moves.
Well, while you guys were chit-chatting, I was in the Forex Analytix chat room, and I bought dollar max. Oh shoot, you guys wrong screen. Shit, sorry. Anyway, I just exited my dollar max long, and well, I was waiting on Steve to tell me what to do, and I'm like, oh, fudge it, I'm gonna get long the dollar max.
You know very well that I'm not telling anybody what to do. I only trade my
anyway money. I'm glad I got that out of you, by the way, so kind of know what you're thinking, and here's what I'm thinking, guys. I had told you, I think that this dollar pullback is going to be very temporary. We see a little dollar pop, or sell off, excuse me, you want to be a buyer of that. I'm hoping the dollar index gets a little bit lower. Like I said earlier, I hope the euro gets up towards 1.7 or 1.6. I guess, keep saying 1.17, 1.16 today. I want to be a seller up there if we can get it. The euro continues to trade heavy. The dollar continues to trade bid. Anything that we see today that we saw today is just going to be overlooked. And people are going to go, hey, look, the Fed is really, they're going to. And Steve may be right in the long term. The taper plan may not work, but they are going to taper, and they're going to.
They're going to start. For sure.
They're going to start, and sure. Sure. We'll see if the market can get a tantrum or not. Maybe the market absorbs it. Maybe we do. But anyway, regardless, they are going to. I think they're going to stand by their word. I think we're going to start tapering. I think we should be wrapped up by 2022, mid 2022, and the market's going to see that. And so you got to be a buyer of dips on the dollar. So I'm just hoping today was, I hope we dip a little further. So
I agree that we're going to start tapering. I'm just skeptical about if they're going to manage to go through the whole process.
Yeah, well, that's first quarter 2022. That doesn't matter for me right now in October of 2021. True. So Ryan, any final thoughts before we let everybody go?
Yeah, can someone take this bloody euro sterling down through 84.80, please?
I need it to bounce.
The bane of my life, this bloody level, I tell you.
Yeah, I'm 100% with you. We're in a fantastic rectangle here, and I think we go through like 84.70, 84.50, and we should see a move towards 82.80.
All right. Well, hey, guys, if you stuck around this long, I got to say, I'm going to, Dale, we can let everybody go. But before I do that, this is the last, 10th, 2 days, last weekend, couple days of our seasonal pricing offer, our special. You guys know it only comes around every so often. So if you want to be part of Forex Analytics, take advantage of it. Because like I said, if you've been around long enough, good prices come and then they're gone, and then there's no special pricing anymore after that. So take advantage of it. We'll see you in the community. Love to have you there. I know we have such a great time in our community. It's nice place to be for traders that trade from home. So Dale, thanks for rocking it out this week. Ryan, thanks for being here every morning. Steve, I hope you can join us more often. I know it's tough with the sun at the moment, but don't worry, time change is coming right around the corner. And
Blake.
I know it's coming up soon, but Europe is different than US. So
yeah, we're end of October. I think you're a week after. So
I think we're like beginning first week of November.
You love that extra hour sleep, buddy.
Yeah, I will. But you know what? I live in Arizona, guys. That's why I always tell you, my clocks never change, and it's so confusing to me.
For you guys.
So it's very complicated. It's like trying to brush your teeth with your left hand when you're right-handed. It's very tough.
Is that your excuse that you're going to be late that week then?
Well,
Ryan.
yeah, I mess everything up. I'm late for meetings. I'm late at these things. I'm late getting up. Actually, the alarm always gets me up fine. But yeah, I screw everything up for the
Ryan,
first 2
weren't we
weeks.
supposed in Europe to decide on a time and not change again, or that plan went
Yeah,
out
no,
of
I
the
think
window?
is that this
Well,
year? Or
why
next
are
year?
you asking
You're not-
Ryan? He's not European anymore. Steve.
He's
No, but we're the center of the time universe. Everything
Exactly.
comes
Right.
out of
Remember,
GMT,
money
so-
comes and goes and time is gone forever. Make it count.
Tom says Brexit means Brexit, Steve. Shoot,
Yeah,
didn't you
yeah.
know that? Damn. All right.
sorry,
No, but
touching a very.
it's a fair point because they're banning or they're stopping doing daylight savings, aren't they? In Europe, I thought it was this year. It might be next year. Who knows?
Yeah, I thought it was this year as well, but I'm really not sure. I haven't looked into it.
Maybe France is moaning about it like everything else.
Enjoy the meteor showers this weekend.
All right. I'm in for meteor shower. Hey, you guys have a great weekend. And thank you so much for joining us today. And remember, we're here every Monday through Friday at same bat time.
We laid
same
it
bat
all out
channel.
on the court for you guys
Yeah,
this week. Don't you think?
always do.
That's right.
All right.
All right. So I hope we added value to what you're trying to accomplish. The way to say thank you is invest in yourself and sign up this weekend. So I'll see you guys. Thank you very much, team.
Cheers,
Bye bye,
Coach.
Dale.
Thanks, Dale.
Yeah.
Thanks, everybody.
Bye bye.
Have
Ryan.
a great
Bye.
weekend and make your plan so you're not a impulse trader next week. Give up being an impulse trader for a week. Try it. All right, guys. Adios.
Adios.